I want to talk about to you next is honestly what I normally get most excited about just because of what it offers. And it goes directly to what you were talking about earlier with your old Honda that got totaled and you had to pay out of pocket, right? How much did you have to pay? Do you recall?
3,000.
You know why you had to pay that 3,000?
Well, yeah, I was confused because I'm like, well, the vehicle, I mean, it wasn't my fault. I had insurance. So why didn't the insurance pay off the whole vehicle? But they stated that it was based upon the market value at the time. And so, yeah, I really didn't understand that. But yeah, that's what they stated. It was based upon the value at the time of the total loss.
Charles, that's the exact same thing that happened to me in my Harley Davidson. So what I'm going to talk to you about is called guaranteed asset protection, or otherwise known as GAP. And what GAP does is, so basically what your insurance company did was it gave you the enough money to cover the fair market value of your car and what it was valued at that time. But cars do what? As soon as you drive off the lot today, because this car is now owned or it's now pre-owned and it's not brand new, what happens to it as soon as you drive away today?
It depreciates. Yeah.
It depreciates, right? But the price that you pay for the car remains the same. Your financing remains the same. And it's going to be that way for the first couple of years while you're into paying off this loan. The car is going to be worth less than what you owe on it. And sometimes, like in your case, I guess a few years ago, it was a $3,000 difference. So you had to pay that difference. Gap protection covers that difference. For like $8 more a month, you're talking about protecting yourself from having to pay out of pocket thousands of dollars for that difference. If God forbid that were to happen again. But if it did, you wouldn't be paying up anything.